August used to be the best month for stock markets, and then suddenly it became the worst. Today we take a look at the data surrounding and also our 5-month projections of what usually happens next based on the first 6 months of this year. It might surprise you. We're also talking about the central bank liquidity problems that are going on right now. Yield curve control has changed for the Bank of Japan. And while markets sent into a flash crash for this, they recovered soon afterwards. Is it something we still need to be watching as traders and investors? And then we come to the BTFP program. Everybody's still taking it and it's still supporting markets. More on that to come. Semiconductors approach new all-time highs, and of course the Qs don't end up putting a new rejection in. Is buy the dip too strong? We'll take a look together right now. Join us. Well, welcome back everybody to the Daily Show where we talk about markets around the world, and it was Rebound Friday across the board with semiconductors and all technology stocks really doing well. That brings us to a weekly performance of slightly green in some stocks, and there were some outliers. Things like Oracle and also Microsoft were not doing so well on the week, and more of that to come in today's video. But let's talk about the Bank of Japan first before we get into some of the heavy data. The tricky road ahead, what they've basically done is they've kind of removed the cap that was sitting there for so long, and they've said it can now move up towards 1%, although they don't expect it. This now means we need to be watching JP10Ys, and we'll talk about that later in today's video. But it didn't seem to affect the market as much as even I would suspect it would have, and it just shows you that everything can be shrugged off until it can't in this current bull run. Speaking of bull runs, the data is in, and you can see here there's some interesting stats coming forward. While August and September can be weak, October, November, December tend to really erase all of that weakness, and we end up with a 17 positive to 1 negative ratio. This sounds familiar, yeah? It's like the July summer run. When we've had such a strong S&P recovery and strong S&P NASDAQ recovery, we generally get something like this, a very bullish run after a hiccup that occurs. The other interesting thing is that if August ends up being a positive month, then September is down 6 of 6 times. That's 100% of the time. So some interesting stats and some stuff to think about bringing forward. Pause if you're interested there. Let's talk about the general years though. What tends to happen? Well, 2 things happen at this time. August and September bring the volatility. If we take a look at the pre-election trends, that is pre-election years over the last 24 years, we tend to get big spikes in volatility straight into the month of August, into pretty much the back end, and that's when we get that vol. We get volatility increases as well in most normal years, but of course it's a little bit slower, and it tends to lead into around the middle of October where we get the turn and we go into kind of like a Christmas rally. And then, of course, we've got the seasonal trends over the last 25 years with pre-election and what happens to the S&P 500. This is usually around the turning point. We tend to see weakness, and sometimes we get a double bottoming effect that happens in August and September. Will it happen again in 2023? This is, of course, the big question that everybody is trying to answer. Let's now move into the big volume trades. Did we see anything that could show us that this is about to occur? 2 large prints coming into the end of the day. Interesting that it was right at the highs. And some people have been sending me some stats about if the market gaps up, sits within the previous daily candle, blah, 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 that it might actually be a heavy sell. This suggests that somebody did close some of their positions. They weren't huge, but they were still large positions, and they happened right at the highs. So, of course, day traders and scalpers will be very patient on these numbers, of course, as Monday opens. And this data really related back to that Monday open. The Monday open, if it's going to be, that's the one that's going to be the weakness. Let's bring out SPXL. This is the Direxon 3X bull fund for the S&P. We saw a large print here. Of course, the market has gone up a little bit since then. So it's really showing you that while there's a large trade here, and it's one of the biggest we've seen recorded, we don't know that the bulls were actually selling their position just yet. We'll get an inkling if we get a new low at some of the key levels that we'll take a look at for this week. Of course, it's earnings season as well, and that means we need to be very well aware of the risks that we're taking into all of the big earnings events. Some of the big ones I think that we'll be watching this week are, of course, AMD, which comes out on Tuesday after the close, plus minus 8%. A large move coming in on AMD. We'll take a look at the stock later. And then we've got SHOP, which is going to be around 11. The hype has never get less. Shop's going to be a big one to show the American consumer for Amazon later on. And then, of course, we've got PayPal as well. Then Apple, Coin, plus minus 12% move. Airbnb and Amazon. Thursday is the big day, though. Not only is the American consumer in focus based on Apple and Amazon, but it also really finishes off some of the biggest stocks in the market. Of course, Nvidia is really the only one left to go. Here's some others just to show you before and after market, and make sure you always have an earnings calendar in front of you, especially if you're trading these particular markets. Let's now move over to beats and misses. How's this earnings season going? Well, a beat rate of 68% is just under the average that we tend to see at around this time. Beats 565, misses 261. But I think it's really just where are the misses going to be? If the misses are in tech, then that's going to be negative for rotation. If the beats are obviously in tech, then that's going to be super positive for the market overall. And I do think that at the moment, what we're seeing is banks doing well. We're seeing a lot of the older industries really recovering in the back end. And we're just seeing a bit of a rotation out of tech at this stage where it's been weaker this earnings season than some of the other markets. Let's move over to options activity, 90-day average volumes. Have we beaten any of them? Well, yes, we have. And there were quite a few stocks that were doing pretty well on this. We saw, of course, Chipotle come out with a 2. We've also had things like AMD starting to get a little bit of trade on it, although it is not an, kind of under average. It's not actually an over average trade, but that was an interesting one. I expect that to really hike this week as we go into Tuesday. And then there weren't really too many other ones other than Johnson & Johnson and Boeing, which had some big percentages. And Boeing was very, very popular last week into the earnings announcement. If we scroll down, 58% calls, 42% puts with an average volume that was much lower than normal. So it wasn't really the options activity that we usually expect to see. When we talk about rotation, what's going on there? Well, it was a 5-day average of really seeing these regional banks flying. We had metals flying as well. And we had a mixture of inflation or recovery style plays being energy and metals. And then we also had semiconductors and communications in the middle. Very strange market from that aspect. We didn't really see any particular one rotation. We just had quite a few. Staples, healthcare, and utilities, they had a great run. They had a couple of days of strength and then they've dropped straight off. So we're not seeing that further rotation that we'd like to see. On Friday, we did have clean energy, communications, and semiconductors and all of the normal kind of, high growth style stocks out in front. And that just showed that people were willing to buy the dip and take risk on the Friday. So just before we jump into the charts and we take a look at all of the key levels that we should be watching right now for the week ahead, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, not only do Tiger Brokers have a whole bunch of special offers in the descriptions down below for members of the community, but on top of that, they've got a platform they're constantly improving. And this earnings season, you need to know the industries that are moving, the heat maps in the markets that are everything to do with sector rotation, and of course, you need to know when the news is coming out. You can do so by selecting weekly, monthly, and daily from not only your own watch list, position, but of course the markets that you want to be watching this earnings season. And more importantly, on the right-hand side, there's a whole bunch of premium news feeds that come through to you. On top of all of that, if you have a particular stock that you're interested in and you want to see what the economists are upgrading and downgrading, you'll be able to see that within the platform and get a bit of an idea of the analysts' expectations over the next 12 months. So what are you waiting for? There's a whole bunch of special offers. Check them out down below. All right, well, let's jump into the charts that we need to be watching this week. And first up, we got JP10Y. Make sure to set alerts for this. It's the fear of the unknown that always freaks markets out. We have been upwards of almost 0.6 before. So just remember, the Bank of Japan themselves have basically said that they think it could go to 0.7, but not higher. At least that's what they expect. So watch this chart. I would set 0.6, 0.7, 0.8 as alerts in the future. And if they start going off and the market starts selling, then you know that this particular bank is being pressured, or the central bank's being pressured, and the markets will be paying attention to this. If that tends to happen, what will probably also occur is US 2-year will start spiking up and will go past 5.1%, which is also an alert that we believe that we should all have on our charts moving forward. Whether it hits or not, you just want to have it there. The volatility of the volatility, the VVIX, how's it going? Well, it's dropped back down after spiking up thanks to the Bank of Japan. And yeah, it was just really just still hovering around this zone. Remember with the VIX, if it does come down to 12.12, it fills the gap from 2020. And that probably is the catalyst, at least in our opinion, of really where we should be seeing the end of the bull run here in mean reversion. And that's because 12.12 is like very, very low for the VIX, and usually a spike would happen into this year. If that occurs quickly, 13.34 at the moment, then we would expect some kind of volatility to occur soon after. Make sure we have those alerts, worthwhile putting them on the charts. Let's look at the skew. It was crushed through Friday, which is of course a positive for bears, although there was no positive price action for bears later on. And then we had high yield junk bonds floating in the middle. No breakout on the junk bond side, so no one's willing to take the extra risk, but also no sell-off. Just kind of sitting, hovering with a gap up. Will it turn into an island reversal? We'll find out very soon. Magma, or Microsoft, Apple, Google, Meta, and Amazon. How was that going? It was almost at a new high here for this run. So it really recovered quite strongly on Friday, showing that the market was willing to take risk. And other than those Q sells that came into the end of the day, there was almost no weakness throughout the session. XLY versus XLP, that shows us the American consumer and the health, is waiting for earnings. I would say Apple and Amazon will move this combo a lot. If this breaks to a new high, expect a nice run on the markets with more risk taking up to around 250 as a ratio. And that's going to be a big one that we'll be watching. Copper ended the week fairly strongly. You can see it rebounded a lot of that selling that occurred. And if we take a look at it on the weekly, it basically sitting right flat bang in the middle. Again, is this showing us that stimulus is coming from China? And more importantly, there is a recovery in that market. While copper, we know this is Dr. Copper. It shows us demand destruction at this stage, just sitting there. I don't know if I'd want to short it at this level, considering that weekly close, though. I'd just be watching for more information, and we will be following it. Traditional central bank liquidity measures are still incredibly disconnected. You can see here this super bright red that's almost blinding us all. That just shows us how far away we are from the central bank liquidity. But as we know, BTFP, so basically these new measures that were put in March to help support the banks and help support some of the losses that they had on their book, that's really helped to regain confidence in the markets, because basically the Fed lost a lot of credibility with everybody as they just said, oh, we'll do whatever it takes. And then all of a sudden something breaks and they go, oh, better fix that. First with the pension funds in the UK, then of course with all of these regional banks and things like all the banks in Europe as well that were going under. And we just constantly see that whenever there's a crisis, they pull in, and that helped to, of course, spurn a lot of this recovery as well. Let's move over to the long leg doji that we have here on the dollar index. And arguably the dollar and currencies have been the most interesting recently. Marking a low and a high will be important here. It hit our secondary target profit zone and started to reject. And if we go down to like a 1 hour chart, we're actually starting to see a turn point here for the dollar index. So it might go up a little bit more, maybe back into this range here. But overall, there could be a sell here on the dollar index and therefore a buy on the euro early in this week. It's going to be a very interesting chart. I'll be watching this one closely with everybody here on the channel. So make sure to subscribe if you like a bit of currency trading, as I think gold, dollar index, euro, a few other currencies could be very, very interesting. Hit one of our targets, did a change of trend on the small timeframes here, looking for it to pull back a little bit more and then to look at a sell. Let's move over to gold. It's kind of similar. Gold actually weakened. And in this case, actually, what's the expectation is that gold might go back up to somewhere around this level and then maybe start to find some weakness. Now, that'll be a little bit contrast to the dollar index, which could just strengthen a little bit, then start weakening. Gold does do that sometimes. These are two very interesting levels. And of course, we'll be watching the reactions off those and how it works. If gold does continue to weaken, we expect it to come into that 1930 to 1925 zone. So yeah, we'd like to see gold maybe weaken a little bit into strength later on. A lot of it's going to come down to yields. Let's jump over to some of the single stocks in the market right now, and of course our indices, and talking about the world in general. And semiconductors almost made a new high. They failed to do so. All eyes watching on this, set alerts above, see how it reacts to that zone. So I would set something like above here and just make sure that we have that alerted to know what's going on. Google managed to put the weekly close in, which is a big deal. This is the huge closes of the week. This kind of points towards 140.60 kind of being hit now for Google, and further momentum play, another $8 potentially in this stock. Meta also closed bullish, pushing into the idea that it could move towards 340 fairly quickly. And these were pretty strong closes. I mean, we had a rejection week, and then we just saw close on the highs. So basically Wall Street saying that there could be a little bit more run in this market and maybe they're going to push a new high. The indices and some of these single stocks are showing slightly different things. Here's Oracle that was trading in a really tight band. We saw it kind of break out to the low end and it sold 3 days in a row. But there's a tale of a couple of markets. Let's take a look at Microsoft on the charts and go to a weekly. If we take a look at Microsoft, it looks pretty bad. That's actually a pretty bad looking candle. And we know there was a huge sell in here as well, or we can assume it's a huge sell because it was at the highs. So this is a totally different storyline to what we've been seeing on some of the others. Let's take a look at Apple coming into this week's announcement. Closes as a pin bar, rejects and comes in halfway. No information yet, but of course, closure above these highs. Wow, we're probably going into further squeezing in the month of August where markets will actually continue to push higher. We've got Google and Meta both showing very strong signs as well that they mean further bull momentum is coming through, which is kind of weird when you think about what we were starting to see there and then how much that Friday reversed so many of what could have been for the bears in terms of new lows. Though it's not discounted yet, we could still get lows and we'll look at the levels for the S&P soon. What about Tesla? It's clearly doing something, whether that's accumulation or some type of distribution between sells, we don't know yet. We do have a gap down here, which is sitting around the price of about 255.50. And effectively what we're looking for is a breakout either way. So we're looking at, if it breaks to the above, we fill the gap up here. If it breaks and closes below, we go to 240. And then of course, if we get underneath 240, we should be in a swing short on Tesla. So still in a bull trend overall, small time frame change, big swing. As you can see here, I've got it marked at the daily level, 240.48. German market, incredibly strong. We suspected that in here, there might have been some sellers, and there were until we came back down to 16,000 and it just couldn't get that swing in. It couldn't get the high, low, higher high, lower low in. If it did, I really feel like there would have been a short here, but it just rejected. It ended up doing a pin bar here. And we mentioned this in our last couple of videos. There was just so much strength coming off that. So now the question becomes, is this a UTAD? Because of course we thought this was a buying climax. This was a UT. That was possibly the new low, though it was so close to this one. And then we rallied up looking for a short in here. Then we've gone to a new high. This looks like a breakout at this stage, so I wouldn't try to short it at all. But yeah, this is where we'll get information. 16,000 worthwhile setting an alert for in the future. So 16K, certainly worthwhile setting alert on the German market. Interesting times. Australian market also broke out and managed to hold a weekly close high, which you can see here. And this shows us that a lot of the recovery, or a lot of the market momentum is happening in the smaller, on the stocks that were, expected to be next. Financials, energy. These are the stocks, industrials. These are the stocks that generally do well next. And you know what happens after this? Well, think about 2020. It's actually RK and those types of stocks that tend to go best in the next run if we are going into a fully fledged recovery here across the board. So Oz 200, thanks to the banks, really is moving quite a lot more up. And this is a fairly strong close for it. And it looks like we're moving towards 75, 7,600. So yeah, pretty strong stuff here from the Aussie. We'll be watching. As you can see, it rejected, then rejected back. So it's kind of like a 2-day long leg doji. So I'd still say it has kind of no idea what it wants to do, but the weekly and other things do dictate that there could be some bulls there. US 2000 hasn't broken out, so it's still sitting at 2K resistance. So we'll call it res here for the US market. And we'll also call NASDAQ still at potential resistance. Weekly closed high, which you can see here on the NASDAQ 100, but not above the close previous wick. Now, if that happens, we're pushing. And I'd say we go to about 16.4K on the bull side. What we were looking for this week, if you were a bear, was an actual close underneath the 20 moving average here on the daily, but more importantly, that to be comboed with taking out this low. So if we'd taken that low, you can see this candle here. Wow, it looked super negative too. And we just knew that this was where those bulls regained and they just went push straight up. This candle looks horrendous. And I cannot ignore it completely until we take that out and take this high out. So here's where the bears have to make their stand if they're going to. It doesn't look like they want to because of the candle that we end up getting, but that's a very rejection-y candle. And if that had made a new low, I reckon that would have been some momentum plays right there. S&P 500, here is the gap that happens. You can see here the gap up. You can see also that it sold off really aggressively and then rallied back up. We now have the capability of potentially even getting like a futures sell that gives us some type of island reversal here. So we have a gap up, then we have a gap down, and we have a market that could be moving through. Watch this zone. This is the big level. We were there as of the last recording of the video, and we knew that this is where the bigger players would probably be sitting if they were going to buy the dip. See that we're in the golden pocket, so the 61.8 fib level, and look at that. Just hits that 45.30 and just boom, straight up. No real signs of weakness until near the end where we saw a sell and then it recovered still. So yeah, every buy the dip has pretty much been working for the last couple of months. This was another one of those zones where I think a few members of our community had shorts that they placed in here, which were pretty good, by the way. They did some up in here. It was nice. And they cleared up a huge bunch of their shorts at these levels because you just can't afford to hold any short for any length of time at the moment. We have almost no swing trading activations throughout this entire bull run. So it's all been short, sharp, and mostly the trend is just bullish at this stage. So we're looking for, of course, the key levels this week. 45.30, set the alerts. The key zone up here, which will be a break to a new high and close, 46.11. That could push us into some pretty significant territory. So if we go to the weekly, if we close that, and we especially do on the weekly, I wouldn't be surprised at all for us to push into a 47.50 or higher. And at this time of year, it's not common for that to occur. We're still very far away from the 20 moving average as we keep moving up. We're still over 7% away. It has been recovering with it because, of course, it'll follow along behind. But at this stage, yeah, it's do or die for the bears. They have to push down this week, and it really is important. Bitcoin, what's it doing? Really nothing. It's hovering in a very tight range. You could probably put a Bollinger on something like this. On the smaller time frames, it'll be stuck within the Bollinger. If you get a closure outside the Bollinger, it's probably going to push. That's a good little strategy that comes around here. At the moment, weakness is ensuing because, of course, it fell through. It's hovering. We're looking for it to go down to 28,000 and that to potentially be where the buyers find it. But if it does rally and the buyers instantly commit, 30,400, once that gets taken, there's a good chance it'll make a new high. So yeah, there's some definite two ways to trade this. And that's what you're really doing as a trader. You're just having patience to react to when you believe you have edge in these markets. Predictions sometimes can be very wrong. So instead, it's about picking your locations. And as a trader, remember, you don't care whether the market goes up to 10,000 on the S&P. What you care about is how much money you've managed to extract from different trades along that way. So as an investor, you care a lot because you feel like you missed out or you're in it and you're running it or any of those things. But a trader is just reacting and they don't really care about the price so much, as in you're not scared of the price either way. What you're doing is just trying to find your edge and replicate that edge as much as possible. For the week ahead, we have some interesting news. We've got cash rate coming out from the RBA, and this will maybe set the tones of Reserve Bank of Australia, for anyone that doesn't know, might set the tone for whether we get more rate hikes in the future. I don't know if I expect them to do a rate hike this month. I feel like it might be down, just stay flat. But anyway, says here economists think 4.35. Then we go down to ISM manufacturing PMI, 10 a.m. New York time. And then we keep scrolling through and we get even more information from a bunch of central banks. We've got services PMI, 10 a.m. on Thursday. And then the big one here is jobs numbers. Has the economy actually started to slow, or are the jobs still going up? This is the question. What has the Fed's high interest rates for longer kind of strategy done to the economy? Are there any cracks? Remember, if we do start to see a weakening labor force, that usually means you're around 6 months away from an official recession. So that's usually the stats that go with it. Big week, huge volatility here. Be careful of currencies into the US. Non-farm payrolls, it's one of the biggest events for gold and currencies. They often move a lot. And remember, often the first move is the false move. Thanks so much for watching, guys. Have a great week ahead. And of course, subscribe to the channel to make sure you don't miss out on any of the big news. Also, check out the sponsor of today's video, which is down below, Tiger Brokers, if you're interested in some of their special offers. Bye for now.